long time Apple bear, I would say maybe it's another qualification. I think historically I've tried to help investors figure out how Apple product cycles would play year after year. And actually, if you look at where Apple and the iPhone is positioned today, they're actually very well positioned. They're entering into a 5G cycle. And what we've learned in what Apple reported in the last quarter is that their business, their consumers, iPhone buyers have been very, very strong. iPhone sales in the second calendar quarter were up 3% year on year, which is almost unbelievable. And the reason for that is that affluent consumers have been locked down, but have not lost that much purchasing power. They spent less money on travel, less money on restaurants, and they've actually spent more money on iPhone. And I think that's a setup as we enter the new product cycle. Apple is going to launch 4 5G phones by the end of the year. And now all what we hear from the supply chain of Apple is that the company is preparing for a record number of new phones to be produced and to be launched. So you could ask me why not having like a more positive view on the stock? Well, I think you've described relatively well where valuation stands today. I think all these stocks, for the moment, we have a neutral view on them. That's purely a valuation perspective.
All right. So the sell-off that we've seen since Tuesday, you think reflects more momentum unwinding or a better realization of some of the risks going into the 5G cycle? Risks about service margins, risks about volume risk if they try to make it up with higher ASPs, and the kinds of things that we've been hearing from other downgrades lately?
It's a very good question. And I think in the sell-off you see today, very little is specific to Apple. I think the sell-off is broader in tech. Ciena, a couple of days ago, was a very significant catalyst. Ciena sells networking equipment, and they say they were seeing their order book drying up. And they guided the next quarter more than 20% below where expectations were. And Ciena was a wake-up call for tech, reminding that in this environment, a lot of projects, a lot of investments may not go through. And so all tech reacted to that. To be honest, I think for Apple, Apple is relatively remotely exposed to that risk because Apple is of course a consumer business and is like an affluent consumer business, which is an area where I don't think you have negative surprise. There is one negative surprise I expect in the 5G cycle. This is gross margin. Making a 5G phone is very expensive. You need to add between $50 and $100 of components and antennas and radio components and baseband in an iPhone to make it fully fledged 5G capable. And I don't think Apple will push that extra cost to consumers. They will see more value in absorbing the vast majority of that cost to make sure that 5G ramps in their install base rapidly so that they can offer new services based on 5G.